welcome to Talk Tickers. Today, we're jumping right into the latest from AudioCodes. That's ticker AUDC. They just dropped their Q3 numbers, and believe me, there's a really interesting story brewing just beneath the surface.
So, AudioCodes delivered this massive beat on earnings, right? And the stock popped, but the story just isn't that simple. There's a question here. Why isn't Wall Street fully convinced? Let's get into it.
Okay, first things first, let's just get into the numbers. And honestly, on the surface, this was a clear beat on all fronts. I mean, they really knocked it out of the park compared to what the analysts were expecting.
So the big one, the number that really jumps off the page, is the non-GAAP earnings per share. It came in at 17 cents. Now the consensus estimate, just 10 cents. That is a 70% beat. Just a huge surprise that shows they're running way more profitably than anyone thought.
And if you look at it on a GAAP basis, the official accounting numbers, the beat was proportionally even bigger. We're talking 10 cents of EPS versus an expectation of just 1 cent. It's wild.
Now, what about the top line? Revenue came in at $61.5 million, which just squeaked past the $60.8 million a lot of folks were looking for. Yeah, it's a small beat, but it's still a beat, and it shows some positive year-over-year growth, which, for a company trying to pivot, is exactly what you want to see.
So you can see it all laid out here. Revenue, non-GAAP EPS, GAAP EPS, a beat, and a beat. No matter how you slice it, this was a solid quarter that really surprised Wall Street. But like I said, that's just the numbers. The real story is what's happening inside the company.
All right, so the numbers are great, but that doesn't tell you the whole story. To really get what's going on with AudioCodes, you got to listen to the narrative that management is pushing, and that narrative is all about AI.
Yeah, the CEO, Shabtai Adlersberg, was super clear on the earnings call. He basically said this quarter is a huge step in their big transformation. They're moving away from their old hardware business and going all in on being an AI-driven software and services company. Voice AI is the new center of their universe. And check this out. This is that pivot in action. On one side, you have their legacy services revenue, which is down almost 5%. But then look at the other side. Conversational AI revenue is up 50% year over year. That is exactly the dynamic they've been promising. The new growth engine is firing on all cylinders. And this isn't just some tiny side project. We're talking about a massive shift in the business. Look at this. Their two big growth engines, Live and Conversational AI, now make up over 90% of their total revenue. The transformation isn't happening, it has happened. It's their entire business now. And you can see the momentum building everywhere. Their annual recurring revenue, or ARR, hit $75 million. That's up 25%. They just signed a huge deal with a global system integrator. Their backlog of future work is at a record $76 million. And get this, they're so confident, they actually reinstated their full-year guidance. All green flags. So, you have a clear beat on the numbers, you have a really strong story about AI, so what did the market do? Well, the reaction was interesting. Positive, yes, but also kind of muted, cautious. You can see it right here in the trading. Right after the release, the stock jumps almost 9%, but then it starts to fade. It closed up about 5.6% that day, had a little follow-through, but then on day 3, it gave back a big chunk of those gains. This tells you investors are taking profits. They're not totally sold on the long-term story just yet.
But one thing is for sure, this report definitely got people's attention. Look at the trading volume. On earnings day, it was almost 4 times the average. So even if the price faded a bit, a lot of eyeballs are on this stock right now.
So that's the big question, right? Why the skepticism? To get that, we have to zoom out a little and put this one quarter into context. We have to look at the stock's history.
Even with this recent pop, AudioCodes has been a major underperformer. Over the last year, it's up about 11–12%. The rest of the communication sector up closer to 30%. And honestly, the 5-year return is still deeply negative. That's the baggage this company is dealing with.
So what you have here is a classic show-me story. The market has heard this turnaround narrative before, and it didn't quite pan out. So now investors are saying, okay, that was one good quarter, now show me another one, and another one. They need to see sustained growth before they're willing to re-rate this stock higher.
All right, so let's get to our final take, the next call. What do we think is going to happen, and what's our official rating on the stock?
So, how do we put all this together? You've got a fantastic quarter, a really compelling AI story, but a market that's clearly still a little hesitant.
So what's the verdict on AUDC?
Okay, here's our prediction. For Q4, we think they'll probably hit the high end of their guidance. They've got that huge backlog to work through. But we think the stock itself will probably be pretty range-bound. Why? Because the real catalyst here isn't the next quarter's results. It's the 2026 outlook. That's what everyone will be listening for to see if this growth story is the real deal.
And that brings us to our rating, which is market perform. Look, they're doing a great job with this AI transformation, and it was a really impressive quarter, no doubt about it. But we think the current stock price already has some of that optimism baked in. For the stock to really take off from here, it's going to take more than one good quarter. It's going to take sustained, accelerating growth.
And as always, just a quick reminder, this is for informational purposes only. It is not financial advice.